Hey everybody, Jonathan Broadbent here, your host and founder of UnWoke.Academy and the Financial PMA with another weekly Wednesday. A few housekeeping notes and then we're going to dive right in. The first is we've got some new proxy vote guidance out. That's that annual meeting that takes place among companies that you may own in your portfolio. And that, yes, includes mutual funds. Inside of the mutual funds that you own are very likely some voting potential. We want to draw your attention to that voting potential and those meetings. So we call out the dates, the time, the way that shareholders can participate. And I do have a series out there. If you haven't watched them already, please go back and watch the series that I've done periodically over the last 3+ years on proxy voting and what it is. But in a nutshell, made very brief for our purposes today, think of it like voting on the corporate behaviors of companies. So if you wonder why companies have gone woke over the past many years, and yes, it is fair to say that many have kind of dialed back or made it more hidden during the Trump administration, but rest assured it's still there, and some of the same people are kind of chomping at the bit to continue to do the same things. Some are just outright continuing to do it, and I'm looking at you, Costco. Costco rolled out a racism-based training program a few months ago, right in the middle of everybody saying, we don't want it anymore. Overwhelmingly, society does not want race-based stuff and racism training in the corporations that we choose to do business with. So all that woke stuff, the environmental, social, and governance, corporate equity inclusion, and the diversity, equity, inclusion, that stuff is not popular. But some companies are still doing it, and there is ample opportunity for we, the people, the investors, with our investor dollars, to influence that. There are some companies out there that do voting on your behalf and do it well. Most major Wall Street types of firms, and specifically starting at the top, we've got the usual big three suspects, BlackRock, State Street, and Vanguard. Left to their own, they vote on your behalf, and they tend to vote left to very far left in a very progressive way. Progressive in the negative. Progressive meaning the ultra-liberal, Marxism-embracing, globalist agenda left. If you don't want that, check out the proxy statement, the guidance that we release. The most recent are SEI Investments, International Bank Shares Corporation, and Qualys Incorporated. We've got a bunch more coming up. I have been creating consolidated lists so you can just skim through, and if any of them strike your interest, or if you happen to know that you own shares in it, act accordingly. Talk to your financial advisors or financial institution and ask them about how the voting is done, and if you have choices about who it is that does that voting for you. There are a couple of major companies out there that probably off radar for you, but they are companies that do proxy voting on behalf of investment firms. I would suggest at least taking a look at it. It could be very easily worth a phone call or an email. And if you can steer the power, the influence of the money that you have invested, when we team up together, we the people, we can fight back against the globalist woke left agenda. So in looking at some of the others that we have upcoming, I've not yet had opportunity to drill down on these and render an opinion on the proxy voting. But coming up, we've got Arista Networks, Old Republic International, Chevron Corporation, ExxonMobil, and an array of others. I'll get to those as soon as possible. Those release on social media. There's a link, a cool little graphic to draw your attention. I hope you like it. And as I said, there's a menu you can skim through and look for companies that you are interested in, that you are concerned about, you think you may own, or you are of the belief that you may own it inside of a mutual fund. By the way, that's your cue. We have done some episodes on how to figure out what your mutual fund is investing your money in. It's actually super easy. With any smartphone or a web browser, you can find out in seconds, at least the major top holdings, typically the top 10 or top 20 or so. One more housekeeping note, and then we're going to dive into the purpose of today's episode, and that is to call out anybody who is considering joining the Financial PMA, or at least even curious about it. The first thing to do, I want to ask you to go through just a simple back of the napkin or mental exercise. Do you have an estimate of how much it costs you to work with financial planners, financial advisors, plan advisors, and investment managers? By that, I mean, often people will have a personal financial advisor. They may have a plan advisor connected with their 401k plan, and the investment management fee is the mutual fund fee. If you don't know the answer to that, don't worry, you're not alone. Most people don't see that, and it's by design. Those fees are out of sight, out of mind. But coming up with some sort of ballpark, just rough guesstimate, is a good starting point. If you're spending $5,000 a year or $10,000, then consider a better alternative of keeping that money in your account to grow and compound. It is possible to significantly reduce or even eliminate the fees that come out of your investments. And yes, that does include your 401k plan. There's some great opportunity there to scale back the fees that you pay out of your investments, which, everything else being equal, means a lot more money in your account growing and compounding over time. In other words, pay yourself, not other people. So on to the purpose of this episode. I'm going to call this one Unwoke Investing, Bursting the Globalist Bubble. This weekly podcast, it focuses on UnWoke Academy, the research that we're doing, and the financial PMA. So effectively, UnWoke Academy started as UnWoke Investing. It's research into the world of finance, using my background, my Wall Street years, my investment due diligence, and exposure to a lot of different types of companies out there, including many of the managers and the talking pundits that you might hear and listen to on television. I pull all that together, research, and then report to you, we the people of the United States, what's happening in the world of finance. We want to uncover the woke stuff, but also find better alternatives. The financial PMA is an avenue. It's not the only one, but it is an avenue to put all that research to work for you. Each week, we expose how trillions of dollars in overfunded, woke-driven investments are propping up a globalist bubble that's quietly draining American wealth and influence. And we talk straight about practical, America-first ways to protect and grow your money. Because this show is for every listener who wants to break free. In today's episode, we're focusing on tracking something that's costing everyday Americans hundreds of thousands, perhaps millions of dollars over a lifetime. That's those sneaky 1% to 2% advisory and investment management fees that most people never question. A big part of the mission of myself personally and Financial PMA is to show how switching to a direct subscription model, like the one offered through the Financial PMA, plus low or zero transaction costs, can put that money back in your pocket, not Wall Street's. Before we get into the numbers, let's be clear about the mission behind UnWoke Academy and the Financial PMA. We believe in free markets, constitutional rights, and putting America first. The Financial PMA is a private membership association, a group of freedom-loving, patriotic Americans who have chosen to operate under our constitutional rights so that we can speak openly and honestly about capital markets, strategies, and investments without the woke censorship or undue influence and people putting their thumb on the scale from woke globalist financial firms like Wall Street. The typical financial advisor fee right now in America still hovers at right around 1% of the account value. Sometimes higher for small value accounts, and sometimes hitting up to 1.5% or 2%, depending on the firm and financial institution and the number of people involved in managing the account. That might sound small until you realize that it compounds against you every single year. I'm going to pause right there and interject that I have had the great opportunity through the course of my career to meet many, many financial advisors. My job frequently is to support them with the specialty that I have. There are some great financial advisors out there who do a really terrific job of protecting and insulating you, helping to steer and guide your investments, evaluating appropriate amounts of insurance and all kinds of things that they can do to help balance out and guide your financial life. My comments aren't to say that financial planners, financial advisors don't have their place, but I will lend some personal perspective and interject that I believe that really good ones are maybe few and far between, and that even some of the good ones are constrained by the financial institution or organization that they work for. So many of them are penned in, and their ability to serve you is sort of dictated by the things that they choose to sell you. Here's a real world example. Imagine you start with a $100,000 portfolio and it earns a solid 7% gross annual return for 30 years, a reasonable long-term equity market assumption. With zero fees, that $100,000 grows to roughly $761,000. Great for you, good job. With an annual 1% fee, however, it only reaches $574,000. You just lost nearly $187,000. With a 2% fee, you're down about $432,000, a staggering $329,000 evaporated out of your account. That gets into the value that I emphasize regularly on UnWoke.Academy and the Financial PMA, and that is the value of knowing what you're paying and, if possible, paying directly rather than having money and fees siphoned out of your account. Yes, it can feel better having the fees out of sight, out of mind, but if your objective is to grow substantial wealth, there is little else that can possibly compare to reducing or eliminating the fees that you pay out of your investment account. Now let's scale up that hypothetical example to $500,000 starting balance. Let's say you've managed to accumulate $500,000, which is actually fairly common for a working family in their 50s. Let's apply the same 7% return and same 30 years. With no fees, you will have accumulated roughly $3.8 million. With 1% fees, you're sacrificing $934,000. With 2% fees, you forfeit over $1.6 million. That is the power of compound growth over time, and it's the power of keeping as much money as possible in your account rather than letting Wall Street and globalist banks siphon money out of your account for their benefit. That's not pocket change. That's college funds, second homes, legacy money, or simply the ability to retire with dignity instead of working longer than you planned. Even worse, if you're a typical American investor right now, that money isn't even buying you an America First strategy. It's most likely investing in globalist agenda and pumping your money into the globalist bubble. It's feeding giant asset managers who are laser focused on ESG scores, diversity quotas, and global climate agendas that often hurt U.S. energy independence, domestic manufacturing, and American workers. Your fees and your investment dollars are literally subsidizing the globalist bubble. Think about it. The biggest investment houses control trillions. They pour capital into companies that prioritize international bureaucracies, net zero timelines that ignore American energy abundance, and social agendas that have nothing to do with delivering shareholder returns. They get rewarded with more corporate equity index, score points, and more money, and you, meanwhile, are stuck saddled with that 1 to 2% freight every step of the way. Meanwhile, everyday investors who just want to build wealth the old-fashioned way by owning productive American businesses end up indirectly funding the very policies that offshore jobs, weaken supply chains, and make us dependent on our adversaries. That's the globalist bubble in action. Overvalued, ideologically driven investments propped up by automatic fee flows from millions of retirement accounts. And every year, those fees roll in. The bubble gets bigger, while your net return gets smaller. There are great alternatives, and I want to be fair to all of our listening audience right here. A part of what has evolved out of the research that we've done at UnWoke Investing, which later became UnWoke.Academy, is driven into and offered through the Financial PMA. The Financial PMA is not your only option out there. You can do it yourself and take the information we have, deploy it. You can take the guidance and feedback that we have, the research, take it to your financial planner or advisor and insist that they do it for you. we would, of course, love to have you. We welcome you with open arms at the Financial PMA. Our subscribers and members are what make episodes like this one possible. But I want to be clear, the mission here is not growing our business and this model. The purpose is to revitalize America. Let's get back to independent free market economy. This is simpler than the industry wants you to believe. Focusing for a moment on the Financial PMA, and again, this information, the research that we do, can be deployed many, many different places. Through the Financial PMA, you pay a nominal membership fee. That's it. A direct, transparent subscription for access to education, strategy sessions, and the private association environment where you can speak freely. Then you manage or build your own stock portfolio through low-cost or zero-commission brokerage accounts. That's where your selection comes in. We have no axe to grind, we have no conflict of interest, and it does not matter where your money is. If you have a relationship with, doesn't matter, a bank or insurance company or stock trading platform or an app on your phone, it does not matter where you build your account. We have no conflict at that level or any other. We work flat fee only on your behalf in a group environment, sharing information and supporting one another as a private membership association. No more 1 to 2% of fees disappearing every year. Instead, you pay a flat fee, a modest membership cost that doesn't scale with your account size, plus whatever tiny transaction costs, if any, that your trading platform may charge. Let's be clear about what that means. There are so many trading platforms out there to help people to build stock portfolios that competition has driven costs down for trading. And again, I want to emphasize, I say this often, I'm going to keep repeating it. We do not encourage frequent trading, day trading, or anything of the like. The objective of the Financial PMA is to reduce or eliminate the investment management fee of mutual funds, help you to know what you own, and reduce or eliminate the fee that those mutual funds charge. So let's run those numbers again using the Financial PMA model. You keep the full 7%. Remember, that's that hypothetical return that I suggested earlier. You may have some fees depending on which trading platform you're using, if it's an online app, etc. Those generally are nominal. I have not seen examples yet where trading costs on any reasonable sized or decent portfolio come anywhere near the cost of mutual fund ownership. It's transparent, it's clear, you see the trading costs, you know them, and it's not money that is constantly siphoned out no matter what. Trading costs are a one-time cost unless you do additional trading. I want to pause right there to interject that I am not a fan of frequent or day trading. Everything that we talk about inside the Financial PMA is designed to help people, our great American workers and retirees, to build, manage, and prosper within a long-term portfolio, not day trading or active trading or those sorts of things. If you're looking for that, I don't suggest that the Financial PMA is a good resource for you. Or perhaps better, put most of your money inside something like the Financial PMA where it can sit and hopefully grow and flourish over time with little or no fees. And if you want day trading, maybe open up your own sideline account somewhere else and you can do some of your own research and do active trading there. Put your real money where the plan, the objective is to build a long-term portfolio that gives you the clarity, the understanding, the visibility, and the transparency and low fee to hopefully grow and flourish to your heart's content. So in that scenario, with a 7% return, your 30-year investment of $100,000 becomes the full $761,000 instead of $574,000. That $500,000 portfolio heads toward $3.8 million instead of $2.87 million after a 1% haircut. Eliminating those fees helps. The difference is hundreds of thousands or even millions of dollars. Stay in your family's hands. You decide exactly where the capital goes. You avoid funding woke pet projects. And because it's a private membership association, You operate with the constitutional protections that let us discuss real capital market strategies without the fear of corporate cancellation. UnWoke Academy supplies the education and America First lens. The PMA supplies the structure. You supply the common sense decisions to stop overpaying for advice that's often conflicted anyway. At UnWoke Academy, we focus on all aspects of the market: domestic, global, large, small, all areas of the market, publicly traded and private equity, and cover all manner of detail. We even get into discussions around different banks, insurance companies, which ones are woke, which ones are less woke, or perhaps not woke. We cover it all inside of UnWoke Academy and the Financial PMA. In that environment, because we are a private membership association, we are not only neutral, but all of it's on the table for discussion. Recently, in episodes and some publications, we've covered energy dominance, home builders, regional banks and private credit, industrials and materials, consumer patriots, and healthcare and medicine, and even get very deep into supply chain, which means where is it made? Is it domestic or international? If it's made and produced internationally, how safe is it in the event of an emergency? Things like that in the healthcare realm are particularly important, and the same applies to military supplies. At UnWoke Academy, we focus on opportunities that align with American renewal. This means domestic energy production that prioritizes abundance and security over net zero virtue signaling. Manufacturing and supply chain companies rebuilding here at home instead of chasing cheap foreign labor. Critical infrastructure, resources, and technologies that reduce reliance on adversarial nations. Sectors that reward innovation, productivity, and shareholder value instead of political scorecards. These are the areas that globalist bubble has underfunded for years while chasing international agendas. When you control your own portfolio inside of the PMA framework, or wherever you may choose, you can tilt toward the real economy that powers American strength without paying 1% to 2% gatekeepers who might steer you elsewhere. So here's the bottom line and a wrap up. Those 1% to 2% advisory and management fees aren't just an expense, they're a silent wealth transfer that funds the very system many of us want to move away from. By joining the Financial PMA, paying a straightforward membership fee, and taking control of your portfolio with low transaction costs, you keep far more of what you earn, and your investment goes into investments on your terms. The private association structure is designed exactly for this moment, so patriots can talk openly, invest wisely, and keep more of what you build. Thanks for joining us. Thanks for tuning in. And as always, thanks to our supporting subscribers and all of those PMA members who make all of this possible. If you're considering joining, visit financialpma.com or UnWoke.Academy, or feel free to email your questions to me directly at jonathan@unwokeinvesting.com. Mark your calendar and come back next Wednesday, noon Eastern time. Our plan is to go live noon Eastern, Wednesdays, to discuss these and other similar important matters. Bring friends, come back, join the discussion, and wherever you end up in your financial life, please defund the woke. Thanks for tuning in, everybody.